All right, today I'm going to walk you through exactly what needs to be in your PPM so you can raise capital the right way. I'm Santiago Cueto, board certified international law expert and best-selling author. And in this video, I will explain what to include in your private placement memorandum. Now, if you're raising capital for your business, you need a private placement memorandum. This document protects you from securities fraud claims. It also shows investors you're a professional and that you're serious. But most entrepreneurs get this wrong. They either include too little information and expose themselves to liability, or they include the wrong information and just scare away investors. Let's start with the executive summary. This is the first thing investors read. You need to hook them right here. Describe your business in clear terms. What problems are you solving? What makes your solution unique? Keep it to 2 pages maximum. Include your funding goal and what you'll do with the money. Many entrepreneurs make this section way too long. Investors are busy. They want the key facts fast. Think of this as your elevator pitch, but in written form. Next comes the risk factors section. This is where most people make a critical mistake. They try to hide the risks. You don't want to do that. You need to disclose every material risk to your business. Well, what's a material risk? It's anything a reasonable investor would want to know before investing in your company. Are you in a competitive market? Disclose that. Do you depend on one key customer? You'll need to disclose that. Is your technology unproven? Disclose it. I've seen entrepreneurs lose everything because they fail to properly disclose the risks. Now, the SEC takes this very seriously. Courts take this very seriously. Your investors will definitely take this very seriously if something goes wrong. Include risks about your industry. Include risks about your company. Include risks about the investment itself. And yes, you need to tell investors they could lose all of their money. This isn't pessimism, it's legal protection. A good risk factors section runs 10 to 20 pages. That might seem a lot, but it's necessary. Now, if you're finding this valuable, hit that like button and subscribe to my channel. I share practical legal insights like this for business owners every single week. Now let's talk about the use of proceeds. Investors want to know where their money's going. Be specific here. Don't just say general corporate purposes. That's lazy and it raises red flags. Break down your budget. How much for product development? How much for marketing? How much for hiring? How much for operations? Include percentages and dollar amounts. And be honest about how much goes to paying off existing debt. Be honest about how much goes to paying yourself. Transparency, it builds trust. Now, your business description section needs to tell the full story. Start with your company's history. When did you form it? What have you accomplished so far? Then explain your products or your services in detail. Who are your customers? How do you reach them? What's your revenue model? And include information about your market. How big is it? How fast is it growing? Who are your competitors? And what's your competitive advantage? This section should run 15 to 20 pages. It gives investors enough information to understand your business completely. The management team section is another crucial place. Investors bet on people as much as ideas. Include detailed biographies for every key person. What's their relevant experience? What have they accomplished? What skills do they bring? Don't exaggerate credentials. That always backfires. If your team has gaps, acknowledge them. And explain how you'll fill those gaps. Include your board of directors if you have one. Include your advisors if they're actively involved. Financial information is where rubber meets the road. Include your historical financials for at least 3 years. If you're a startup with no history, well, include detailed projections. Your projections should cover 3 to 5 years. Include revenue projections. Include expense projections. Include cash flow projections. Show different scenarios if possible. Best case, base case, and worst case. Explain the assumptions behind your numbers. Pretend you're on Shark Tank. Why do you think you'll grow at this rate? Why do you think your margins will be this high? Investors will scrutinize these numbers and watch out for Mr. Wonderful. He'll definitely give you a scare. And those numbers need to be defensible. If you've had your financials audited or reviewed, include those statements. If not, include at least compiled statements from a CPA. Never include unreviewed financials that you prepared yourself. That screams amateur hour. The terms of the offering section explains the deal structure. What type of security are you selling? Common stock, preferred stock, convertible notes? Each has different legal implications. Explain the price per share or unit. Explain any conversion features. Explain any liquidation preferences. Explain voting rights. Explain dividend rights if they exist. Be crystal clear about what investors are actually buying. I think you get the picture. You'll also want to include minimum and maximum investment amounts. Some offerings have a minimum raise amount. If you don't hit that minimum, you return all the money. Disclose this. Include the timeline for the offering. When does it close? What happens if you don't raise enough? Your subscription agreement mechanics need explanation too. How do investors actually invest? What documents do they sign? What representations do they need to make? Most offerings require investors to be accredited. Your PPM also needs to explain what accredited means. It needs to explain how you'll verify accreditation status. Discuss transfer restrictions. Private placements involve restricted securities. Investors just can't sell those in the open market. They need to understand the illiquidity of them. They need to understand they might be stuck with this investment for years down the road. Include a section on legal matters. Who are your legal counsel? Are there any pending lawsuits against your company? Are there any regulatory issues? Full disclosure is absolutely required here. Finally, include all your exhibits. These are the supporting documents attached to the PPM: articles of incorporation, bylaws, material contracts, lease agreements, intellectual property documents, financial statements, your subscription agreement, any other relevant documents. These exhibits can add another 50 to 100 pages to your PPM, but they're necessary. Work with securities attorneys who knows what they're doing. And yes, it costs money, but it costs a lot less than defending a securities fraud lawsuit later on. Now, if you found this information helpful, give this video a like and subscribe to my channel for more business information. I'm Santiago Cueto, your Florida business attorney. Be sure to watch more of my videos right here.